All right, good day. You're welcome to my YouTube channel. And today I want to discuss something that is very important, something that changed my trading journey completely, something that improved my trading um, results. All right. When I was able to find this out, it literally changed my trading for the better. And I think it's going to be very important for you to listen and to pay attention to everything I'm going to be making known to you, because this is very important. All right. So let's get straight to the charts. All right, so if you are not a subscriber, if you have not subscribed to my YouTube channel, please do well to do so. I would really appreciate if you subscribe to my YouTube channel. I'm just starting out, all right? And I thought it nice to just keep on uploading content, even though I've not really had as much subscribers. But I know definitely in the nearest future, it's going to be a very amazing channel. It's going to be a very amazing channel. So do well to hit the subscribe button and also like the my video so that other persons can see, and then the YouTube algorithm can recommend my videos for other people who are also searching on how to improve their trading ability. All right. So let me remove all drawings. Now this is Euro USD 15-minute time frame. All right, I love to trade the 15-minute time frame. All right, but there's something I want you to know specifically. Prices, the market price does not just move because the market just wants to move. All right, there's what we call time and price theory. All right, the fact that the market moves with time, then price follows. Right? So the market moves based on time and price. So how does this make any sense, you may ask? All right, so this is where I want you to bring out your tool, the tool that I believe is going to be very important for this, for the practical. All right, so I want to believe that after seeing this video, you go to your own charts and then you are able to put into practice what I'm making known to you now. All right. So now what I want you to do is to go to your indicators. All right. And then you look for sessions. Look at this top left, sessions by Lux Algo. All right. So what I want you to do is to click on sessions by Lux Algo. And then you see New York, London, Tokyo, Sydney. I want you to tick off Tokyo, tick off Sydney, and just work with London and New York sessions. All right. So this is it. Now, what I want you to notice is that the price always moves towards the high of the New York, or the low of the New York, the high of the London, or the low of the London, which is basically the high of the day and the low of the day. All right, so those areas are areas you want to look at very specifically. All right, so when the market is able to take out the previous high of the day or the previous low of the day, there is a tendency for a reversal. All right, so you want to take note of the previous high of the day, the high of the previous day, the low of the previous day, the high of London, the high of New York of the previous day. Now, in this case, we see this was on a Wednesday, right? Now, this is the high of New York, which was also the high of the day. Now, what did we see here? We saw that the market took out the high of the previous day. There was an impulsive push to the downside. All right. So what we are going to be looking for is for market to take out the high of the previous day or the low of the previous day, and then we can now begin to look forward for opportunities, Once the market is able to take out the low, we want to see opportunities moving to the upside. So the market always brings these kinds of opportunity every day. So in this case, we see that the market are taking the previous low of the day, all right? And then we see the market also pushing to the downside a little more. And then we saw multiple weak rejections right there, and then a strong push to the upside, right? This was where we saw our break of structure right there. And then the markets changed from a bearish move up into a bullish move. So at this point, we'll be looking for an opportunity to buy. So where would I have bought? I would have bought somewhere around here, right? Stop loss definitely below that zone. And then I prefer targeting a risk reward ratio of 1 to 2. All right. I use a risk reward ratio of 1 to 2 for reasons best known by me. All right. So you need to find out what risk reward ratio is suitable for you. What risk reward ratio is good for you. All right. Some people have risk reward ratios of 1 to 10. And they are not able to hold their trades. Along the way, emotions come in the way. All right. And the truth is, if people were able to take their trades, maybe a risk reward ratio of 1 to 3, they will most likely win more times than they are doing now. But the greedy nature of humans, we always want a big reward, and then we are blinded to the fact that the market has given you this. Why not take it and then look for another opportunity that is similar to this and take that same opportunity again? All right. Maybe in the next video, I'm going to be talking about risk management and how risk management, even targeting a risk reward ratio of 1 to 2, can make you so much money. So stop looking for high targets. People trade looking for high targets, and they are doing well, of course. But everyone is not the same. You need to understand your own psychology. You need to understand what risk reward ratio is convenient for me. What risk reward ratio is, comfortable for me, emotionally, psychologically. All right. I don't want to deviate. All right. Maybe in the next video, I'm going to be talking about that. But for this video, I'm just talking about how you can use the high of the day, the low of the day to look for opportunities to take a trade. All right, so let's go back in time. So we see all right, what did we see here? In this case, we saw the London high, New York high. This was the high of the day. This was the low of the day. This was New York's high. So what do we do? This was the highest point in the New York session of the previous day. And what did we see? I saw in this place, there was a break of structure right there. So once there was a break of structure, there was a push to the downside in the next day, all right, which also formed London's low, all right. And for people who trade support resistance areas, this would have been a good opportunity also. We saw the market coming back to retest that zone, and then I would have been looking for an opportunity to take a trade right there. So long position somewhere around there. Once I saw this candle, all right, my stop loss will be exactly below that zone. I love giving my trades enough space to breathe, and since I'm not making use of a high risk to reward ratio, can cope with having a stop loss that is a little bit farther away from the entry, and know for sure that if I ever get stopped out, I got stopped out because the market wanted it so, not because my stop loss was too tight. So now we saw this was a good trade. All right, so we want to use the previous day as a reference. If you are able to do this, believe me, your trading results will become a lot more better. Use the previous day's high, the New York's high, the previous day's low as a guide to your taking trades, and your trade will never remain the same. Now, the reason why people are always wanting to take trades every day, they're always wanting to enter trades, any setup they take, because they don't understand the power of time and price. All right, so we see this was New York's high, all right, which was within the time of New York. This was London's time period. This was New York's time period. And if you notice something, you will see that most opportunities come within that period, time and price. All right. So we see at early New York, that was when we had that push to the upside. All right. We see at early London, we saw that strong push to the downside. We saw that at New York, early New York, we saw that very strong push to the downside. So if you go back in time and check every beginning of the day, which is London, you will notice that that is where we have the most volume. All right, so you want to take advantage of these opportunities as much as possible. Now let's go back and see, what do we see here? All right, remember, we are looking for opportunities in looking at the high of the previous day, low of the previous day, and looking for entry confirmations to take a trade. All right, so in this case, what did we see? We saw that the market had broken structure at that point. When the market broke structure at that point, we saw that strong, little push to the downside. And then in the new day, we had a little push back to the upside. And what did we see? The market came for the high of the previous day. And then we had that very strong drop to the downside. Now, I trade only the 15-minute time frame basically because I have other things I'm doing, and I may not always want to be on the chart every single time. All right, but if you were able to see this trade, I think in the 5-minute time frame, this would have presented an opportunity for you to take a trade. All right, for some people, this 15-minute time frame right there, if we are taking a trade right there, okay, this is still fair. Stop loss above is about 26 pip. And then my target is only a risk reward ratio of 1 to 2. All right, I don't target so much. All right, so this is a risk reward ratio of 1 to 2. Okay, so we see that opportunity right there. Okay, that strong push to the downside. So the same thing keeps happening every single day. We have opportunities upon opportunities in the London session and then in the New York session. It's left for you to understand market structure and then know, okay, what am I seeing this period that could make the market to move in a particular direction within this time frame? Does it respect the previous day high? Does it have anything, to do with the previous day high or the previous day's low? Or is there any way at all I can make reference to the previous day? Okay, so we see the market in this case took out the previous day's New York session. All right, took out the previous day's New York session, and then we filled a little gap which was within that space. All right, I wouldn't have taken that trade anyway because it happened before London session. And of course, I don't take trades except London is open. All right, so this happened somewhere around the Asian session. I wouldn't have taken a trade right there because it doesn't fit my criteria for taking that trade. Even though the trade went in the direction, I wouldn't have actually taken the trade. All right, so the same thing applies every time, every day. Okay, so we see these two. You see, we had that break of structure right there. Right, and then in the London session, we saw that strong push to the upside, and then the market came straight for order block. Right, after taking liquidity right here. So we see that market has taken liquidity right there. So market are taking liquidity at that point, and then also taking liquidity from that point, and then we saw it push to the downside. So I would have waited for a confirmation entry, which was somewhere around here, and then put my stop loss above that point. All right, remember I said I like having my stop losses a good distance away from my area of interest. So I would have targeted a risk reward ratio of 1 to 2, which was that simple, that easy. So this is what it looks like if I get off my sessions. Remember, sessions by Lux Algo is what you are looking at. And then this is a risk reward ratio of 1 to 2. And I was able to hit that very easily without stress. All right, so if you love this video, if you enjoy this video, please subscribe to my channel. There will be more educative contents like this. I'll be talking about risk management. I'll be talking about psychology. I'll be talking about risk management, trading psychology. I'm talking about managing trades. I'm talking about trading strategies in general. I have quite a number of students that I've taught, and they are doing really well, trading the Forex market. So I decided to bring this version of myself to the YouTube, how do I put it, to the YouTube channel, or to the YouTube history. All right, so this is just a token. And believe me, there will be so much more educative, inspiring contents that will be coming up really soon. Please, I would like you to also follow me on my Instagram page. My Instagram page is The Winning Trader. Winning Trader. So just check me out, and then I'll be posting very educative contents right there too. All right, do have a wonderful day, and God bless you. Have a beautiful day.